Well, last week the majority of economists expected the Reserve Bank to cut rates, and they did not. That was not our forecast, but we've been given a lot of encouragement last week that our core view that we announced back in February, that there'd be 2 rate cuts in this cycle, we've been given a lot more encouragement about that based on the Reserve Bank statement on monetary policy that was released on Friday. In that statement, they lowered their growth forecasts and they lowered their inflation forecasts down to the levels that we expected. And that was really what we were anticipating when we announced the rate cut forecast back in February. But of course, since we announced that statement, the market is now pricing in 2 rate cuts. So the Reserve Bank's policy is to provide forecasts on the basis of market pricing. So basically what they've said is that their growth and inflation forecasts are what I would call barely acceptable, and yet that assumes that interest rates get cut. So it looks very clear that the interest rates will be cut. The Reserve Bank provided a condition which relates to the strength of the labour market. They've talked a lot about the tension between the labour market and the growth numbers, the fact that the labour market has remained very strong despite the fact we've seen very weak growth. And they're still uncertain as to how that will be resolved. So I think they want to look at a few more labour market numbers over the next few months, and we expect to see some gradual weakening in those labour market numbers that would make it very clear that it's time to cut rates in August, which has always been our target. We expect then that there will be more evidence that rates need to go even lower, and then we'll see that second cut in November. That, of course, is weighing on the Australian dollar. As you can see, the Australian dollar is very much in a downward trend at the moment, obviously also affected by the trade wars between China and the US. But the anticipation of lower interest rates is a key factor with that weaker Aussie dollar. And we're still happy with our forecast that we released back at the beginning of the year that the Aussie would reach about 68 cents by the end of the year. Thank you.